As three highly knowledgeable real estate investors, Tony, Bob, and Jasmine would like to utilize the 1031 exchange to their advantage. Tony, though real estate rich, isn't very diversified, and he's getting tired of dealing with tenant issues. After doing a review with his broker, Bob discovered his investment properties are giving him low cash flow in relation to his equity. As an avid and aggressive investor, Jasmine wants to capture the profits from her current investments and park the money for a better opportunity. All three are savvy investors. They all know the 1031 exchange is an attractive option. However, with the limitations of the 45 and 180-day time frame restrictions, they could lose 30 to 50% of their gains to Uncle Sam. In addition to the tax risk, in an environment where the inventory is low and prices are high, they all know it's a good time to sell, but not a good time to pay brokers' commissions and reinvest what's left back into an elevated market. As a result, none of them are willing to take the chance, which means nobody wins. Investors aren't able to sell, capture, and protect their gains, brokers don't get the listings, and Uncle Sam doesn't collect any taxes because no transactions took place. This isn't the case for Tony, Bob, and Jasmine, however, because they sought out the help of DeferredTax.com, who educated them about a backup option to the 1031 exchange called the Deferred Sales Trust. All three investors learned they can now safely start off their transaction as a 1031 exchange, and in the event that they cannot close on the new property or there are unused proceeds, then the remainder of these proceeds can be transferred to the Deferred Sales Trust. The benefits are clear. Tax deferral. Since the seller never takes possession of the cash, taxes continue to be deferred. The proceeds captured within the Deferred Sales Trust can be diversified in other investment options besides real estate. The proceeds captured within the Deferred Sales Trust can be reinvested in real estate later on. The trust can generate income that can serve as an extension of an overall retirement plan. For better diversification, Tony uses the 1031 exchange to buy triple net properties that he doesn't have to manage. The remainder of the proceeds can be transferred to the Deferred Sales Trust, where it can generate a separate source of income. Bob uses the 1031 exchange to capture some of the profits from one property and diversify into several others. If he cannot close on all the properties he has identified, the remainder of the proceeds can be transferred to the Deferred Sales Trust, where it can be invested, earn income, and use it to purchase another property at a later date. Jasmine can use the 1031 exchange to try and find the opportunity she's been looking for, but if it doesn't work out, it can be parked on the sidelines, and she can wait for a change in the real estate cycle. Everyone, including Uncle Sam, was pleased now that the clients will move forward with profitable transactions and enable our investors to do what they do best. There are many ways to apply this tax strategy, either individually or in combination with others. To learn more about your options, contact your real estate agent and schedule an appointment with DeferredTax.com today.